You guys know I've been all in on gold, literally been tweeting about it non-stop, and we finally pushed up to run out this high and this high too. I've been tweeting about us hitting 1998, this high over here. We smashed it out the other day, but the party isn't over. The reason I say that is because of this. I see relative equal highs up here. So this high and that high, they are so close together. Let's just double check to see how many points or how many pips they are away from each other. They're probably like 30 pips away from each other. So these are blatant equal highs in my eyes. And this is where I believe price is going to go. There is still some more upside potential for gold. And this is where I'm believing gold is going to get to. This is my drawn price, the liquidity above this high. We could even see 2080. We could see 2100. I'm going to be looking for this liquidity, the liquidity above this high, to draw price to it. Now, when it comes to entries, we've been bullish for gold from these lows here because it traded into this massive down close candle here. If I just put my annotations on now, you're going to see this down close candle here. I've just highlighted it in this color. That's my massive down close candle. When price pushed down lower here, we ran out every single one of these lows, all that liquidity. And so I've been bullish from down here. I've been buying and closing positions since down here. So now I believe there is another opportunity. So if I just zoom in now, these are just lines that I've put on the chart and it just separates the weeks out for me. So I can just see what we've done for the previous week. That's all it's done. So this week was a bullish week. We had another bullish week and I'm anticipating another bullish week. Prices dropped into my area of interest. Let's just remove this line here. This is that week. There was an area of inefficiency from this kind of 6-week high to that one's low. If I just mark up now, this is our area of inefficiency, also known as a fair value gap. Prices come in to fill in this area. And now I'm anticipating for price to turn around and attack the buy side liquidity. So what I would like to see is I would like to see this imbalance hold. I don't want to see price trading beyond this imbalance. I want to see price take off from this imbalance. And so then from this level, this imbalance where it is now, we're talking about 1,390 pips. So a phenomenal amount of pips. There's going to be multiple opportunities to get in. It is the next day. This was the area of inefficiency on the daily time frame. I've just entered a buy. And now I'm going to be looking to take price to the upside. I'm aware that FOMC is today. So, you know, all kinds of stuff can happen. But I'm going to take this as my very first entry. So now when it comes to my entry, just to quickly show you guys what's going on. Let's go to the 5-minute time frame for this to show you this real quick. We have a massive down close candle, a huge down close candle here. That's a massive down close candle. We ran the previous day's low, so I'm going to go ahead and put that on here too. This is also a Wednesday, so I'm expecting this Wednesday to be the low of the week. And now I'm looking for us to push up to the upside. And then my target is literally the very highest point, guys. This is a swing trade. Like I said, I'm very bullish on gold, and so I would want to see gold continue to push higher. So my TP is going to be the intra-week highs, which is this Monday high over here. That's Monday's high. And there's going to be buy stops up here. The very safest place to put your stop loss would be beneath the down close candle. And so here is my 50%. So phone is very high, 2 is very low. Here's 50%. As you guys saw, just been stopped out. I'm going to see whether we can get a move to 50%, and then I'm going to jump in again. I just wanted to touch on that real quick. I know I've mentioned this before in many of my videos. When the institutional candle is a large institutional candle, what I would do is I would enter in thereabouts the high of the institutional candle with a stop loss just above 50%. And then if I was to get stopped out, then I would jump in again near about 50%. And so that's how I play larger institutional candles. If the institutional candle is really small, then I can put my stop loss beneath 50% and it's Gucci. But if you guys can tell, this institutional candle is 60 pips. That's a large institutional candle. And there's no way I'm having a 60 pip stop loss. If I get stopped out with this move here at 50%, so roughly just here, roughly about 50%, then I'm going to call it quits. I'm going to call it quits. I'm going to wait till after FOMC to see what gold can give me. All right, family. So this is my trade. I'm going to see whether we can get tagged in on this, and then we're going to see how this pans out. I did put my entry a few pips above the 50%, so it should tag me in. I did that because of the spreads. So let's just wait and see how it goes. There we go. I should be tagged in any moment now. There we go. That should be it. Once again, that's the third time. I'm just going to be patient and wait, guys. I should be in the trade. I believe this is probably a missed trade. It's all good. I'm going to see whether we can get above this high. That would be a good sign. If we can get above that high, that would be blessed. Absolutely blessed. So we got the push above this high, which is good. What I'm going to do is I'll probably be looking to enter market execution when price gets down into this down close candle again with a stop loss around these lows down here about 37 or 38. So let's go ahead and get ready for this. We're getting that push. It's all good. No need to panic. No need to stress. we are going to be getting active very soon, but we just need to be patient. They've run out this liquidity, which is good, this low. We've taken out this high, which is perfect. Now I'm looking for price to come back down into this range and then take a higher. You guys can see the fair value gap as well. So this is our fair value gap here and here. I'm going to be looking for price to get down into this level here. So roughly about 39, stop loss about 32. So this would be a market execution I'm going to be doing. And my stop loss right beneath this candlestick low around 38. There we go. That's the buy. That's the buy right there. Boom. We are in the trade and we should get moving to the upside now. Don't forget, this is FOMC conditions, so it's a little bit different to what we normally are used to. Yeah, guys, we should get going now. We should get going. There we go, guys. We're getting that push up high, which is good. And the thing is, just for this video, I'm going to take it to a certain high, and then I'm going to, take partials and end off the video. I'm going to go ahead and delete this one now. So this buy limit that I had in, obviously you guys saw how that went down. It's all good. You don't have to catch that entry. The beauty of all of this is knowing where the next entry is to. And so we identified where the next entry was. That was perfect. And now we're looking to target higher prices. Now, when it comes to taking TP, there are various different places you can take TP. I know there's relative equal highs up here on the daily time frame. And if you want to be swing trading, then you can swing trade it all the way up here. That's if you want to swing trade. But if you're not interested in swing trading and you want to do more so intraday trading, then you want to bring it down. Take it down a notch. Take it down to a different time frame. So this is our intra-week highs. This could be a potential, although I believe this might still be a swing trade, but depending on how price gets moving, you can target today's highs. So let's just draw up a line here. I'm going to just mark up all the different areas that I could be potentially looking to target if you use intraday trading. And I'm going to talk about scalping too. If you're scalping, hands down, your trade should be ending right here at this high. These are the London highs. You should be scalping it to this level. If you're going to be doing intraday trading, then you're most likely taking the intraday high. If this high was higher, this is still basically that same scalp, but if this high was higher than this, then if you're intraday trading, that high, if it was higher than this high here, would be your target. But look, you're going to have to look to the left to see what other highest price is giving you. So we've got a high here, and we've also got another high here. This one sits nicely with the very highest point of the imbalance, so this can be a potential target too. There's going to be more opportunities to jump in and take it to this high. You don't have to hold the whole thing. And just another thing as well, this is consolidation. You can see prices going sideways. This is expected on FOMC day. We've taken out this low already. We've not taken out the highs. There's going to be buy stops up here. So this is going to act as a draw on price. But like I said, FOMC day technically should be consolidation and this manipulation of both sides. I'm just banking on the fact that this down close candle will act as some kind of support to take price to the upside. I wanted to just drop this as well because I wanted to let you guys know the importance of where to place your stop loss. You can see I placed my stop loss beneath 50% of this down close candle. That was very key. Price could drop into 50% and then take off. And if I was to go ahead and mark this up for you, so from this very high to this very low, you can see price came close to 50%. If you're that person who wants to catch a tighter R and you want to put your stop loss just above, you are more than likely to be stopped out compared to the person who puts it beneath 50% of the down close candle. This area has been balanced out. Now I want to see price shoot up to the upside. We should start seeing some big pushes to the upside. Just so you guys know as well, so from this level here to our high, that's 60 pips. Right, that's a beautiful amount of pips. We are only going for I think it was either 10 or 15 pip stop loss. So let's just double check. This is like a 10 or 15 pip stop loss. So from this level here to this low, it's roughly about 15 pips. This is a beautiful trade from where we entered. Stop loss hit right here at this level, and then we got this level here. That's still a 1 to 4 hour trade. If we take it to the very high, let's just say to one of these highs to this high here, that's a 1 to 10 hour trade. This is a beautiful trade. But to run out the previous day's highs, we're looking at a 1 to 30 hour trade. For the person who really wants to swing this and really wants to test himself, getting up to here, that's a 1 to 47 hour trade. What's good, family? So I wanted to give you guys a beautiful update. So you can see right here, price has traded all through the roof. So we've gone up roughly about, for my entry, roughly about 110 pips. If you're a scalper, this is where you're looking to jump out. Here is the previous day's high. It's a bit of a stretch, but I still believe price can get up there. You could target this high here if you're an intraday trader. Sometimes you don't always catch it the first time. Sometimes you have to take one on the chin before you can go ahead and get your win, okay? And so there's no stress in that. There's no drama. I knew exactly what I was doing. I knew exactly what I wanted. I didn't panic because I'd missed this entry. I wait for the next best entry, and you guys saw it. It was this fair value gap with my stop loss at the right place, and now we're getting that push up to the upside. Let's quickly just mark up that high real quick. because I'm pretty sure we are going to blast through this high here. This is a high to be looking out for. And if you're an intraday trader and you've not taken anything off the table, then for sure take it off when price gets to this level here. All right, so my aim is to take off roughly about 50% off the trade here. I'm hoping for this to get up there before FOMC. If not, I would have to take partials before FOMC and then let the rest ride to see whether it holds. And ideally, whatever pair I'm trading, I would like to see that pair moving pretty quickly beforehand. This is why I'm aiming for this high to take some kind of partial profits at, and then I'm going to move my stop loss to break even. I wanted to be here for FOMC, so we've got a few minutes. So what I have done though is I have taken partials the moment price traded, you know, just to the low of this imbalance over here. I took partials. Now I'm going to wait to see how this plays out. Like I said, what I will be doing is once price gets to here, I'll take some further partials off the trade. So cool, we are getting ready for this. We are moving. So far, we're good. We're good. Once it gets there, I'm taking off more. Taking off about partials 8, 9 right here. 8, 9. Boom. Don't forget, we're intraday trading this. This is not a swing trade. This is not one of those kind of trades. We are intraday trading this. And so gold is moving exactly how we wanted it to move. It's gotten to our level of interest, which is this high. And now I'm going to move my stop loss to break even. It's still not loaded it for some reason. I'm just going to refresh. There we go. And this is, here's gold. Gold is moving fine. I'm going to move my stop loss to break even now. Here. I don't want to see price get back here. Even if it does, it's all good. That is trading gold. Like I said, you don't have to be swing trading everything. If you wanted to, this can be a position that you don't even need to be concerned about no more. You can just wait and see how price moves for the rest of this position. This would be known as a runner, and you've taken your piece of the pie and you've left a little piece on. This one should be left to right. Okay guys, then I forgot to show you guys my executions. You can see it right here. So this is my trade. You can see this is my very first entry where I got stopped out. I jumped in again here. I took some partials off the trade here. Like I said, it was FOMC day. And so you just don't want to be messing around on FOMC day. Then I took another partial on this kind of stock here when price traded above this high. And now I'm letting the rest of this trade ride.